Lemonade, Root, Metro Mile have done so much for the insurance industry because prior to them, like the big exits hadn't been in insurance. And when you get big exits, you get more dollars flowing into the sector. And when you get more dollars flowing into the sector, you get better talent who's saying, oh, I want to devote my energies to tackling the problems in this insurance market. And so I think, you had mentioned this earlier, no one plans to get into insurance. They just stumble their way in it. And I'm really excited because we've been just seeing so much more deal flow in the space as a result. And I'm really excited for what the future of claims can look like. I am Katelyn Johnson, and this is the future of insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like Prudential and Zurich use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com. And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com.
Thank you for making some time to talk with me. You had to get it over email, but I get giddy on the idea of AmFam Ventures, so I'm sorry if I'm fanboying a lot, but you guys were really early on setting the stage for what CVC could look like in the space, and actually you moved kind of beyond that at this point, but just give us a little feel for what is it about AmFam Ventures, the way you're set up, the history of it, that kind of creates what is honestly, I think, a market-leading investment arm for a carrier, but really defining where we're going as a market in a lot of ways.
Yeah, well, first of all, thank you so much for the compliments, because that means a lot to us. And we don't, really like brandishing ourselves too much in the markets. So it's always nice to hear when folks think really highly of us and compliment us. So thank you. It's been an interesting evolution for our fund. So we got our start in, depending on who you ask, 2012, 2013. And we really started putting capital to work, and we were a true corporate fund at the time, like $50 million balance sheet capital. We had some really fun, the evolution of how we did our investments kind of evolved over time. And it ultimately led, some of the later exits we were or some of the later deals we were doing in Fund One was Ring, which ended up being a unicorn. Yeah. So
which that was Shark Tank guys said no to.
Yeah, exactly. Yeah. So that was such a fun ride for us, but it led us to be able to do Fund Two because AmFam said, "Oh, you guys kind of know what you're doing," and we structured Fund Two as AmFam being kind of a single LP fund. We did a lot of exciting companies out of that fund, Bold Penguin being a big one, which if you have been reading the house. Yeah, lately it was a nice exit. So, and then in 2019, we started the fundraising process in 2019 and closed Fund 3 in 2020, which has provided us with $213 million of fresh powder to deploy into this exciting insurtech sector. So it also allowed us to bring in multiple LPs into this fund, because one of the things we noticed about the ecosystem in just growing up with a venture arm within a carrier was we were able to provide a lot of strategic value, to the carrier by saying, hey, we're looking out, 5-10 years ahead of where you guys are thinking about right now. We're looking at how the landscape's shaping and changing and where everything is going. But they were also able to provide tremendous value to us, especially in our thesis development and our diligence. So it was just so wonderful, and is wonderful, to be able to get on the phone with any divisional head and say, hey, we're doing a deep dive here, or we're running on this deal right now. Give us your best and brightest and help us work through this. And so we realized that not only it was this really interesting value loop that was being created of we could introduce startups to carriers regardless of whether we were investing or not. That benefited the carriers and benefited the startups. And so that wasn't a unique value proposition just to AmFam. So we were let's bring more folks to the party, and that will just make it more valuable for this ecosystem. And so that's really why we set out to raise Fund 3 and kind of what it does in the market.
I think it's really interesting because I see this in both CVC and innovation teams where some carriers are adamant that they need to stand alone because in doing that, they have the freedom to look ahead and everything, but they're completely missing that kind of like super deep subject matter expertise that is kind of critical to know, like, does this make sense? Does it have legs? And how about for the core business? Like, where do we need to start thinking differently about things?
Absolutely. And I will say, I think the one thing that's so critical to that, and at least to our success, we feel has been that we've never had these rules around you have to have a contract with any operating arm of any of our LPs, because we see we're financial first, but we play by the rules of a strategic road. What that means is we're not going to ever be a generalist fund. We've very clearly defined our purview and where we're focused on the market, which we define as core and adjacent. We can go into that if that's interesting, but that's our compass. That's our true north, and that keeps us honest. And we will debate it in investment committee meetings. Is this something that is truly adjacent or truly core? And are we going to put our stamp of approval on that? Because we don't ever want to wake up and say, we don't recognize ourselves. Like, we started out with this mission to change the landscape of insurance, and yet we're doing deals that have nothing to do with insurance. So that would be a failing on our part, in our opinion.
And it can be tempting. Like, you may get something from someone who doesn't realize you wouldn't invest in it that like would be a great investment. All the time
We have to turn away great deals. Yeah, absolutely.
So
absolutely.
Can you give me an example? Like, what's a core investment and what might be an adjacent investment?
Yeah. So core is going to be quite obvious to probably most of your listeners. It's going to be the MGA, the brokers, the
Bold Penguin would have been a core investment.
Exactly. Any software powering an ecosystem that is like specific to insurance. So like even AMS systems and things that Bold Penguin would be a great example of that as well. So those are all truly core. Adjacent is going to be software that insurers would use, but it is not specific to just insurance. So I think Hi Marley's trying to do that concept of, hey, we started in claims, but we can be broader. We're not just an insurance tool. And so right now we obviously see Hi Marley as very core, but if over time, if they had approached us when we first met them and they were, multi-industry, we would say, oh, this falls kind of in adjacent.
Yeah.
And then things like, we're always looking for ways to provide non-obvious value. And so I'll just highlight one of our, maybe it's seemingly random to us. It wasn't so much. It's a company in our portfolio called Tire Agent, and they sell tires online. And you would say, what's the insurance angle there? And it's really twofold. The first is tires are a major part of a vehicle and the safety component, and they account for 7% of the accidents that happen on the road per year. On the other side, Tire Agent specifically is able to collect a lot of interesting information from their customer base. A lot of folks are financing tire purchases, and it allows them to almost be able to instant quote their customers, and if there is a brokerage play to be had here, and so we will a lot of times invest ahead of that vision actually being played out in the strategy, but seeing that and knowing, okay, that's where they can go. It's the same thing that we did with Ring. They weren't in insurance.
I was going to ask, is Ring one of these adjacent ones?
Exactly. Ring would have been adjacent.
So I've got Clear Cover in my book, and obviously like born out of American Family Ventures. But they brought up the Ring examples, like some of the seemingly wacky things that were being invested in, but then they were like, but if you have more security at your front door, then obviously like that starts to play into the security of your home, which we would cover. So like, I got it, but
totally.
I think on the outside, it's like, wait, that doesn't make any sense.
Totally.
Like, did the package get delivered? Is it who they said they are? Like, I don't see how that's home security, but you start to get it.
Exactly. That's exactly right. So,
Yeah,
And Kyle's funny because Kyle, the CEO of ClearCover, he was the one who initially met Ring first. So it's nice that he got to talk to you about them because he was the one who had to really go to bat for that company.
That was obviously a really smart deal.
Yes.
So, all right. So we talked about kind of that strategic anchor, and that it can be hard to do. At the same time, I think there's a lot that talk about it, but like how you actually operationalize that and decide, do you end up putting time back into them aside from money? Like you have these SMEs, and you talk about, was it Tire or Agent?
Yeah.
Right. Do you connect them with people at AmFam or one of the other LPs who could help them make that vision real, or is it just money in a board seat kind of thing?
Oh, 100%. So we never push that, like we never make an investment and say you have to be in insurance in X number of years or X number of months, or even mandate that they have to do it at all. But what is important for us to do is say, hey, if this is an avenue you want to explore, we can connect you to experts to help you be thoughtful about it, whether that be folks at AmFam, consultants, you name it. We've got a broad network of folks whose expertise that we can tap and pull into our portfolio companies.
And do you ever see that kind of in the reverse direction where someone that you're looking at or investing in, aside from just, telling AmFam like, hey, you should evaluate these guys or it could be helpful in X. If you see something that's more profound, like there's been shifts in the market, maybe stuff that hasn't hit yet but is coming, where you're like, we're seeing something here and we need to be thinking about that more strategically on the corporate side, not just the investment side.
I think yes. So Bold Penguin actually is a great example of this in that historically commercial insurance has just been so fragmented, and because there's so many NACE codes, it's really been difficult to kind of to aggregate that, and it's been difficult for agents to spend dollars responsibly to get really compelling leads. And so when Bold Penguin came to bear with this thesis of let's create a marketplace to basically be able to buy and sell leads from these agents, because they're getting all of these leads that are not relevant to them, and they want to be able to be more targeted and find relevant leads. AmFam, allow through us is we're able to explore that on their behalf and our carrier partners' behalf through the venture fund. And then ultimately it ended up by AmFam saying, oh my gosh, this is critical infrastructure that's going to power the future. We have to have it. And that led to them acquiring Bold Penguin at the end of the day.
Well, that is a really good example then. That's something that seems out there. And having worked at one of the few, actually at the time, the only direct play in that space when I was at Hiscox, like no one was really doing it. And anyone who tried wasn't really getting anywhere.
Right.
And then there were all these aggregators and platforms and things like Bold Penguin. It's like, well, we don't know what's going to make it or what isn't.
Yeah.
So a lot of carriers were like, no, it's not going to do anything.
Yeah.
So that's great foresight.
And I mean, it's a well-named company because as Ilya, the CEO, always says, it takes one Bold Penguin to make the first jump and then all the others follow. And so in this case, we had one big carrier partner make the bet on, and it wasn't AmFam. This is a Bold Penguin initial customer who said, hey, we're going to take the dive here. And then all the other carriers started to follow suit. So,
see, I never got the name. So I was like, oh, it's like modern tech, like they're all going to have a weird name. But no, I get it now. That makes a lot more sense. And it's nicer than calling them lemmings.
That's right.
If they're going to fish and stuff, like it's for good purpose, not to jump off a cliff. So we were talking before we started recording, you were going into claims in particular. So we were talking about like kind of what are you seeing on the horizon? And you called out two things. One was embedded.
Yeah. So embedded insurance, it's funny to us that everyone is just now talking about embedded insurance because we've been talking
hashtag blockchain kind of
it's
thing.
Totally.
It's at every conference.
Everyone now seems to know what embedded insurance is, which we love. We've been investing against a thesis around embedded insurance since 2015, 2016 era. I mean, it's what caused Kyle Nakasushi to say, I should build ClearCover and then take that plunge and us to support him in doing so. So So we've been, as a fund, looking for really interesting embedded insurance plays for a while now. Protect would be another example of us kind of actualizing against that thesis. And they are, unfortunately for them over COVID, a live events insurance platform. Yeah, but they embed themselves into the checkout flow. And so, they've been able to show you're able to get 6% conversion on very consistently on folks saying, oh yeah, I want this insurance for, or they're able to get, I'm sorry, not 6% conversion. They have a much higher conversion rate, but 6% take of the ticket price. And people are like, yeah, for just 6% of the ticket price, that feels like a great value to know that if I have to cancel for whatever reason. But I think the key point about what they're doing is it's in the moment, it's in the checkout. And so you're not trying to sell somebody something that is not relevant to them. And that's like the whole purpose of embedded insurance. People don't want to think about insurance. They don't like having to purchase insurance. And so the easier you can make that journey for them, the better. And in the moment, when they have to make these critical decisions, if you can surface in real time that option, we've just seen that be a highly compelling value proposition.
Yeah. Now, this might be a tough situation for them in the midst of, but on the back of this, when people start going back to events.
Oh, totally.
They're going to be way more sensitive to it. So actually, the platform's built then.
It's totally, and it's so smart because what they're doing is, they lock up a partner, and they're the only person powering that checkout process. So they have exclusivity, which is really nice.
Yeah. No, I get that. It is, so Clearcover's in my next book for those who are listening. Hint. And you can get into this more, where it was like, they had this idea. I was trying to see if I could quickly get to my notes, where it was like, well, what do they call it? Because it wasn't embedded yet.
No.
Insurance as a service was one phrase. And then, let's see, where's Clearcover? I thought it was brilliant. It was like, they're talking about these things, and it was like, this wasn't even a thing yet, and now it's called embedded insurance. I don't know if I'm going to find it fast enough.
And Kyle says that's a better name.
Incidental distribution.
Yes, incidental distribution. That's what we've been calling it for years. Yeah.
And I get it. And if you go outside the US, actually, it's happening a lot more.
Yeah.
So like Southeast Asia, Grab is doing embedded insurance for like a critical illness product. We talked about it in another episode, but like this is happening, even if it's slower to come to the US. Like this is a real thing. It's already been proven.
Right.
It's just forming, unlike blockchain.
Yeah.
It's still like, it's happening, but it's maybe a little bit more hashtaggy than reality just yet.
Yeah.
So you had also mentioned claims as another key area. What is that? Just because no one invested in claims for years? I'm sensitive, haven't been a claims guy. Is that what it is, or is there something real going on in claims right now?
No, I think there is something real going on, and I think it's one from market dynamics, and two from just the competitive nature of what's going on in the insurance market, which ultimately is market dynamics. So as we've seen more of these insurtechs come to rise, Root, Lemonade, Metromile, all went public in some shape or form this year, or I shouldn't say this year, last year, and this year. The interesting thing is they're all being valued on like a growth multiple, which is very atypical. No other carrier is awarded that type of valuation based off of that. They're all on return of equity, right? And so it's created this interesting spot where they don't have their insurance fundamentals down in the marketplace whatsoever. Loss ratio is out of control. Expense ratio is crazy. But they have created it's more competition in the marketplace for now the traditional carrier to go up against, because now they're not, Progressive isn't just fighting against the same old. Now they're fighting against the Roots of the world. And if Lemonade ultimately becomes a brokerage over time, they're just going to be fostering even more competition. And so,
which they're doing in life insurance. They're a broker,
exactly
they're not a carrier. Yeah.
Exactly. And so, and they might that might be the winning strategy for them at the end of the day, because renters is a little bit of a dog of a market, unless they can get their true thesis to play out as we acquire them at the renter stage and then convert them at the homeowner, because that's a meaningful policy size. I think what's really interesting is that now there seems to be this focus on bottom line and profitability. And so it's, if we can't control loss ratios, or loss ratios are starting to creep out of our normal range because either we are feeling competitive pressure or whatnot, it's how can we be leaner on the expense side so that we can fund activities that we need to support our top line growth. And so it becomes much more of a renewed focus for folks. And I think we're finally seeing Lemonade, Root, Metro Mile have done so much for the insurance industry, because prior to them, the big exits hadn't been in insurance. And when you get big exits, you get more dollars flowing into the sector. And when you get more dollars flowing into the sector, you get better talent who's saying, oh, I want to devote my energies to tackling the problems in this insurance market. And so I think, you had mentioned this earlier, no one plans to get into insurance. They just stumble their way in it. And I'm really excited because we've been just seeing so much more deal flow in this space as a result. And I'm really excited for what the future of claims can look like.
I appreciate you saying that. But I think the point's really valid. It's not just about the money, it's the talent too.
Yes.
And you see that as there's this huge mass of really smart, clever, engineering focused founders who are like, I want to solve this problem. Or amazing people coming into the legacy carriers, the incumbents, who also want to solve problems and be creative. And I think it's starting to shift some of, at least in my eyes, some of the commentary about insurance being the boring place you go to just hide in a cubicle for 35 years. There's some really exciting stuff going on. I think it'll still be time before the dinner party is a safe place to talk about it. But there's, certainly in the investment community, insurtech is a hot word. There is a focus, and you see that with people looking at, Hi Marley mentioned, the number of 20-somethings who chose to work at a tech startup focused on the insurance industry. That says something, because they could work at any startup.
Of course, yeah. There have historically been way sexier industries than insurance. And so it's nice to see it's getting some recognition from the young folks.
Yeah, no, that's very true.
Yeah.
So if that's what's kind of brewing right now, long term, put your super long term glasses on, is there anything that is that you're seeing as this is going to be fundamentally different? So I'll give you an example that's way out, probably.
Yeah.
At some point, people won't own cars. They'll all be autonomous. And that could be 80 years from now. I have no idea.
Yeah.
That means, what is a personal auto policy anymore? It's nothing, right? It's product liability and commercial property, and probably just reinsurance for car makers, and totally different world. So what do things look like then? Are there fundamental shifts that you guys are watching that these are developments that we need to be mindful of and see when and how do we dip our toes in them?
It's so funny you bring this up. It's so timely, because we're literally just talking about this as it relates to a current deal that we're looking at, in that we were talking about clear cover, how everybody always used to talk about autonomy when they were talking about clear cover. And I think as venture capitalists, we just have these rosy glasses on that it's oh my gosh, autonomy is going to happen on this accelerated timeline. And it hasn't come to bear. And so now people are disillusioned with that timeline. So it's almost, it's so funny, because it used to be a thing that was brought up so often in Clear Cover's early fundraisers, and now it is never talked about because it's just not on a relevant timeline.
People were actively looking at it in 2015 as well, what are we going to do? I'm you're going to be dead, so don't worry about it. You're not going to be here for it.
Right. So, I think it is so hard to, there are so many companies that are going to be built and that are also going to fail between now and when we get autonomous vehicles online. And it's going to take them a while to get autonomy right. There's still going to be accidents. And I think the thing that we're seeing is that insurance has actually, on the road to autonomy, it feels like insurance is going to be incredibly important and then drop off this cliff because it's going to be like, cars are going to get more and more expensive because there's more and more sensors and more components to empower this autonomous vehicle state. But there's still going to be accidents. And so you're still going to need insurance until all of a sudden they flip the switch and they figure out, oh, no, actually we've created the perfect system that will never create an accident.
Right.
But I don't know. That's hard for me to opine on, because it feels like such a different world. But I think your core question was, what are other things that we're seeing that could be along the line of that? And I mean, we think about life insurance a lot. We've got a lot of LPs who are in life, and we start thinking about like the annuities market in particular. And I'm not super deep on it. So I can't go into like the intricate details, but I think one thing we're thinking about is like, as people start living longer and longer and longer, how do we provide the right type of annuities product that doesn't mean the carriers go out of business because all of a sudden people are living a lot longer than they expected? So how do you appropriately create a vehicle for that to finance like longevity? Or what does it look like if people start living well into the hundreds of years? And is that something that will happen in our lifetime? And what does that look like? And so that's another area that we like to speculate, and it's fun, but I don't think we're investing actively against any theses that we think will play out eminently on that front.
I think it's still early, but like it's a curiosity, right? And we need more of that. I mean, that's historically the way we would solve for that is we'll just change the mortality tables, and which just means it's a more expensive product.
Correct.
Which isn't like, you go back to the micro insurance and better world, like there's a reason why people aren't buying the existing product you're trying to solve for.
Correct.
And just better sales campaigns, more advertising is not going to help with that.
Yeah, exactly.
So yeah, I mean, it pushes you to think completely differently about the product. Like something like Day Forward,
right,
which is not really solving a long-term aging problem, but it's solving for some need for coverage with different economics. Right. Recognizing not every buyer is even up for a term policy.
Exactly.
That's interesting. I wouldn't have expected you to say life and annuities.
Yeah.
We would be something more PNC-ish.
Well, we would have historically, but now that we have our multi-LP fund, we've got a lot of life carriers on board, and it's just been a fun area for us to spend a lot of time. We have one of our partners is very deep in life. He came from a life carrier. And so it's been nice because we didn't have to start from zero on that front. And also, being born out of AmFam, they do have a life division. It's just, it's not, I mean, like auto and home are obviously a much more in the forefront than the life.
Yeah. That's awesome.
Yeah.
I think I could probably keep you for like 6 or 7 more hours. Like, we just keep going, and I want to respect your time. Maybe we'll have you back another time.
I would love that.
This has been awesome. Like, really energizing and exciting. It's very cool to hear about the things that are kind of bubbling and brewing. And for anyone who thinks that carriers are old and can't think ahead, like AmFam made a decision in the like early 2010s, whether it's 12 or 13 can be debated, but that clearly like is bringing in a different perspective for the carrier. And I've seen AmFam change quite a bit, and it's like, it's clear one of those drivers. So that's awesome. It's great to hear the story from the inside.
Yeah. Well, thank you. I really appreciate the time and being able to come and chat with you. And I'm so excited for your next book and what you're going to write about and things on Earth.
No, it's awesome. Thank you so much, Katelyn. I really appreciate the time.
Yeah, you bet, Bryan.
That was great. Thank you to Katelyn for joining for the conversation, for the show, and for sharing a little bit of what life must be like inside of AmFam Ventures, the kinds of things that they see and the thoughts, the investment thesis, as you would refer to it in the business, but the thoughts and the ideas that they're engaging with on a daily basis. And I was just thinking about how the fund opened up for their third fund, or how the firm opened up for their third fund to more investors beyond just American Family, and how that's broadening their horizons even further, getting lots of different perspectives from across the insurance industry and not just in PNC per se. So really interesting stuff. Thank you to Kate
for the time for this episode. And for Dan Reed, who runs AmFam Ventures, he wrote the foreword for my book. So if you haven't picked up The Future of Insurance Volume 2, you should do that. And if you have, you'll recognize AmFam Ventures and Dan from the beginning, where he opens up the whole discussion in the book, which is great. It's a really good foreword from Dan. So pick up the book and you can check that out. So shout out to Dan and the AmFam team. And a few of their investments are represented in the book, which was not planned. I wasn't aiming for an AmFam party in there, but Branch is one of their investments, and Clearcover, obviously, AmFam Ventures is a part of that story. There's a nice overlap with Dan having written the foreword and then some of the stories in the book. So pick that up. Make sure you are subscribed to the show so you can get more goodness as I talk to other leaders and thought leaders from around the insurance industry. And a big thank you before we go to Medallia for making all this possible by supporting the show and sponsoring this episode and the rest of them in this first season. Thank you, everybody. I look forward to bringing you more insights in the next episode. So be sure to subscribe and tune in. Take care.